Hi, welcome to Curious Breaks. Today we're going to talk about Snowflake, ticker symbol SNOW, Q3 2021 earnings report. Snowflake went public in September this year, and this earnings call is the inaugural conference for the company. The call was hosted on December 2nd, 2020. Since this is our first time covering Snowflake, we will start with a quick overview of what Snowflake does and how they make money. Snowflake is a leading data cloud company. The company was founded in 2012, and its revenue in fiscal year 2020, which ended in January 31st, 2020, was $265 million. Snowflake offers three core services: storage, compute, and cloud service. These services enable customers to transfer and unify their data in the cloud platform, process different use cases simultaneously without latency, and optimize the performance with no administration. In terms of revenue reporting, Snowflake separates the product revenue from its overall revenue. Product revenue represents over 90% of total revenue. Customers pay for the credit hours to be used on the services offered by the cloud data platform. Most customers are under capacity arrangements, which are tied to contracts. These contracts typically run from 1 to 4 years. The other side of business consists of one-off type of projects and activities. Snowflake's main competitors are the three largest cloud service providers: Google, Amazon, and Microsoft. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 24, 2020, Snowflake share price is $323, and its market cap stands at $91 billion. Neither the trading price earning ratio nor dividend yield is available, as Snowflake still reports operating loss and it currently does not pay out any dividends. As of December 15th, the short interest ratio is about 22% of total floating shares. Now let's take a look at their latest financials. We will start with the income statement. For the Q3 2021, Snowflake reported total revenue of $159 million, which is 119% higher than the same quarter last year. The revenue growth is driven by increased usage from its customers. Since Snowflake is still in the growth phase, the company invests heavily in sales and marketing and R&D to support growth. Total operating expense totaled $262 million, which is 96% higher than last year. Overall, Snowflake reported total operating loss of $169 million, or $1.01 loss per share. Snowflake also published some relevant details in their filings. Looking at the revenue by geographic market, we can see strong growth coming from both US and overseas markets in this quarter. In addition, Snowflake reported impressive growth on remaining performance obligation, or RPO, which will be recorded as revenue once the service is performed. Customer count also showed healthy growth, which will build up future revenue pipeline. Now moving to the balance sheet. Snowflake increased its cash on hand and short-term investments by $4.4 billion to a total of $4.8 billion from the beginning of the year. The increase came from the IPO proceeds. Meanwhile, Snowflake does not carry any long-term debt. In short, the company has very strong liquidity. During this meeting, the management emphasized the message that Snowflake is not a SaaS business model, which means the revenue will only be recognized when the service is performed. So billing is not a relevant indicator. Rather, RPO will be more indicative of future revenue. In this quarter, Snowflake furthered the partnership with Salesforce. It also announced the launch of Snowpark in November. Snowpark will enable developers to write codes and perform more functions on Snowflake platform. In addition, Snowflake announced enhanced data governance strategy. This allows the customers to control access by user type. Moving to the current year, fiscal year 2021 guidance, revenue is expected to be around $538 million and $543 million. Non-GAAP measures of gross margin to be around 68%, operating margin to be negative 40%, and adjusted free cash flow to be negative 18%. During the Q&A session, some analysts asked about the long-term target of the gross margin and the reasons behind the strong RPO growth in Q3. The management commented that the long-term gross margin could go to mid-70%, driven by two factors. One is better pricing with cloud vendors once the company hits meaningful scale, and secondly, a better pricing discipline with customers. The surge of RPO in Q3 is driven by larger enterprise customers signing multi-year contracts with Snowflake. Snowflake is actively pushing 3-year deals with new customers. One analyst also asked about the newly launched Snowpark. Snowflake intends to use Snowpark to better connect with customer data scientists to optimize their experience, which could lead to more potential customers joining the platform. Lastly, one question was asked on the future go-to-market strategy. The management made it clear that pursuing the large enterprise customers will be their top priority. They will hire dedicated sales force and use proper compensation plan to execute on this plan. Now, let's take a look at Snowflake's stock performance before and after the earnings call. Snowflake reported quarterly revenue of $159.6 million, beat analyst expectation of $147.5 million, but its adjusted EPS of $1.01 loss missed the consensus of 26 cents loss. On the following trading days, however, the market had a very bullish reaction after earnings release. Lastly, here is the latest summary of analyst ratings of the company. In December, we do not have all updated ratings from the analysts, but in November, most analysts gave the rating of either hold or buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.